Hey, it's Mac with PriceActionTradingSystem.com, and it is Tuesday. It's November 10th. This will be our chart lesson for today. And for the most part, this is a range day. You can see the overnight highs here, the overnight lows here, and pretty much everything was inside that. We broke a little lower here temporarily, just trapped a bunch of shorts really, and then traded back up to the highs, and then we kind of stayed in the upper half of the range for the rest of the day. Really got tight in here. It's really still, it's still a 10-point range, 10 to 12-point range at times. So even though it looks really tight compared to the big day, it's still, a fairly decent range, 10 points. So 10 points seems like nothing now. 20 points really. I mean, 100 point. We have 100-point days lately. So used to, if you had a 20-point day, you had a big day. This would have been a huge day at one point. So right now it just feels like nothing. So, but anyway, it's a range day, and you had to kind of find these shorter term trends within and trade them, and you really needed to narrow down in to find some of these. So just like you got this green channel working up, but you had a real steep temporary, this orange one, kind of orange colored first, and then we had the break, but we stayed within the green one. There's really two legs up. If you measure that first leg and then look for a second leg, we went a little bit higher. Same thing here. You had this first leg down, and at first you really would start right there. I mean, that's pretty much your measured move, and you can see we might have been a little bit further than that. But as we continued to go sideways, once we finally did go lower, I would measure from there too. And you can see we almost had a perfect to the tick measured leg, measuring it that way. But technically, there's nothing wrong with measuring it from here. It just took a little longer to get there in a different path, but you see we still got that measured move. So always look for those measured moves. I mean, that when we're rallying up back up here, it's hard to believe you're still going to get a measured move, but it still happens. And really, you got two legs down here. You got a couple moves in the middle as well. It's just kind of one of those range days where you're just up and down, and those days can be harder, especially when you don't get a consistent place where you turn each time. That's what really makes it hard. Because notice how up here we're turning at different places, not quite the same. Where when you get a spot like this where you consistently turn right off of that low, it makes it much easier. But when you get these consistent, even out here, you're starting to get some consistency. But prior to that, you're making different levels all over the place. And it just makes it really hard to trade a range like that consistently. So you can still trade it and you'll still get setups, but generally you want to wait on a lower high off the highs or a higher low off the lows just to be sure that the move down is over or the move up is over. But let's back out. Let's get on out here where we can see something, and we'll go through the trades and we'll wrap the day up. Okay, 7 o'clock pretty much came as we're bouncing off these lows right here. You do get a triple test right here, but notice how the signal bar is just an inside bar. It looks like congestion. I wouldn't take that. And really your trend is down at this point. So, but when you find some support like that, a lot of times that just turns out to be the midpoint of the range today. So I would just skip that. And then finally you get a first entry, and you do get a break of the trend line, but you get a second entry short with a nice bearish bar right there. It's close to almost being outside the 1/3, but I believe that's close enough, especially when you're looking for this second leg down right here. And so I like going short there. And of course, we end up bouncing here. You get two legs up, so it's possible you might go short right there. But one of the reasons you don't is because of this. Notice how it bounces again. This is technically, these make a matching high, so you could use this as your signal bar. And if you go short one tick below that on a second entry with these two bar matching highs, it's a good chance you might push up again. So I think you're better off to wait. And then you get another huge bar, and you're right back to kind of the lows. You may take that trade. I tend to like it, but it's a little bit aggressive. So it turns out to be a great move. But this one I would skip this one. It's just too risky at that point. I'd want a lower high. This is technically not a lower high, but it's still a double top. It's just one tick off. And you do get the 2-bar matching high to kind of double confirm that it tried to go higher twice there. So I like that one a little bit. Again, it's aggressive. Your lower high doesn't come to way down here, and that does look like one leg, so you're probably going to get another leg. But I'd wait on a little better trade than that. And then finally you get a second entry short right here off the key entry point. Notice that low, and you get a first entry, and then you get a second entry short. And look at it go there. So that turns out to be a good trade. That's not a perfect signal bar, but it still closes in its lower 1/3. And it is a second entry short. And really you could almost, technically it ticks higher right there, but I'd still call that a failed second entry long. And technically this is not even a new high, but you've got that one leg down, and you're going to be looking for another leg down. And that's putting prices down here, and that does give you a new low, which is kind of what you're looking for. And you see we came real close. We didn't quite get there, but we get a break here. You get a first entry, and then you get a second entry short here on a lower high as well. There's a little trend line working up through there. Like so. And you try to go higher once. That one looks a little congested. It's still a lower high. I marked it green. The safer bet was to wait for it to try to go higher again and fail. Now you got a failed second entry long, and you get a nice move down. And there's actually 2 legs there. You can see there's a little 2-legged correction in the middle. So there's you another measured leg pretty much. There's your first leg, and there's your second leg right there. And you got a little 2-legged correction in the middle, which is usually the center of a move. And then it bounces. It's really tempting to go long there. It's basically a large double bottom there, and you could look at that as 2 legs down. So you may take that trade. Sometimes those turn out to be major highs and lows if it's a range type day. And so I tend to watch those trades. Actually, that's not your overnight low right there. It's a little bit lower here, but that was your last low that we had made, and you can see we're really finding some support right there. So anyway, you may take that trade. It's a little bit aggressive, but look how far it is back to the EMA. There's a clear 2 legs down there, and if we bounce here, it might turn out to be an important low for the day, which a lot of times those are. But again, you're always better off to wait on a higher low, and we don't get one. Well, we get a higher low, but it's not till way up here where we broke lower. You don't want to go long there. There is a failed second entry short right here. I didn't mark that trade. It's a rather big bar, but it's not as big as some of them. I mean, it's $212.50 risk on that bar, and it is a first entry, second entry. I really thought you'd be better off to wait on a higher low, and you just don't get it. So maybe we'll get a failed second entry short, which we actually do right here. But by that time it looks a little congested. But when it tries to go lower again and fails and gives you a second entry long right here with that nice bullish bar, I like going long there. You're probably at least going to retest this high, and we may still be working on the overnight highs. So it's that little trap where we try to go lower there, and it even breaks 1 tick lower than that one. So you may have said, hey, that's a first entry, second entry, but that's a double top, and you can tell that's just sideways. It doesn't really start trending back here, so that's your first leg, and then you get a first, and there's actually a little hidden 2 moves in there, but I think that's too risky when you got 1, 2, 3, and now basically 4 bars kind of going sideways there. But when you make that little double trap right there where it breaks lower and gives you a true second entry long, because I count that double top as a new high. So first entry, second entry, just go long right there. That turns out that you don't know that it's going to take off like that. You're just looking to get a scalp, but that turns out to be a great trade. And then you run up, and you do make a double top here, but you got to go short below this bar. They make it's a double top with a 2-bar matching high, but that bar is a little bit questionable for a first entry. You get a second entry here, but again, it's right into the EMA, a little bit of congestion, and you see we just keep working sideways. We finally made a failed second entry long there with a fairly bearish bar, but again, it just looks too congestive. I marked it green because if it breaks lower in there, there's a good chance it'll push on down a little bit, probably enough to get a scalp, but I just think it's a little risky. You're better off to wait, and if you're just a little patient, then notice what happens. You get a new low, a first entry, and then you get a second entry short right there. Nice bearish bar, and this turns out to be a super quick move to the bottom. Well, not to the bottom, but down to the low side here. And at this point, I would have drawn this line here and pulled it up, and you can see it fits real nicely at the highs. And we actually continue on down here. We just kind of go sideways there, and I'd go ahead and measure that leg, and then look for a measured leg down. And you really don't get a good chance to enter. There's a failed second entry long right there, and you can see the midline is held 1, 2, 3 times, so that pretty much gives you confidence that, hey, we're probably at least going to this lower line. And if you notice, that's a new high, so a first entry, second entry, there's probably going to be some bottom pickers there that's going to get trapped, and look at it go, and it actually overshoots right here. So this is where you got to be real careful. I wouldn't take any more shorts on that overshoot. And notice we find that support from the overnight, your overnight support right there on that line. And you get a little failed break lower. Unfortunately, you don't get a good signal bar there, because that's the ones I really like to take. I'd still mark it green, but on a trade like that, if I had a good signal bar, I'm going to take it. It's worth the risk. It's not a huge bar either. It's just too bad it's not. I mean, it's a $150 risk to try to catch a move like this right here. And really, this whole move. Those usually turn out on range days to be important highs or lows that make great moves. Then you come back, though. You get your high or low here. It's right into the EMA. There's a little bit of some congestion across there. It doesn't like prices are being rejected yet. But then you get a failed second entry short and a nice bullish bar, and then there it goes. So I like waiting for this one to go long. That one's, especially when this one doesn't break above, it ends up inside bar, and then you get another one here. It's just better off to wait. And then you get the trap, and it turns up, and so now you got a failed second entry short, and look how bullish that bar is. It still turns out to be a great trade, and if you catch this, if you don't exit out right here, you could ride that all the way up. You know, you're probably going to exit out of here and look for a new trade. And if you do, you get another great opportunity here to catch it on. And you don't take any more risk on this trade here. But notice that you make that low and you come back and you test it once. You actually test it a couple of times there, but the spread is here. Generally, I won't count that but one test. And so it comes back your second time here and you get your double test, and it actually breaks lower and turns and goes higher right out the other side. You could wait on this bar to go long to close, but I like going long one tick above that bar when it runs by, and look at it go. We traded up into this, so we're probably going to, if you wait till here, you're right into the highs. Here you got a little more room, but it's the trap here that really, when you're looking for a reversal and you just came off the lows of what looks like a range anyway. So that's why I really like that trade. That turns out to be a great move. You come back here and bounce off the trend line, but you've already had a break of it, so you got a new high. A lot of times you'll try to make that next leg, and it would have worked, but I just think that's too risky. It's not back to the EMA. It is off the key entry point, but you've already had your break and a huge move up. The odds are we're probably going higher, but maybe there's some other pattern here, which it turns out there is, the green two-tiered channel. And it just drops down. You get a close outside, and you try to go lower twice. So you get a higher low right here. It basically makes a double bottom, but you're moving down. You don't technically get a second entry here, but you get that little trap where it tries to go lower. So that's a high or low, and I like going long above that at the key entry point. And really, it makes it here and then kind of confirms it. And it takes off. And you don't get a, there's another little second entry here, but you can't enter on that congestion right there in that spot. You do get 2 legs up, and then it works down. And it does the same thing again, basically it did there. It's a similar pattern. Again, it actually gaps over here and then trades up. So that makes it a little different, but it's still an engulfing bar, and it's a high or low. So, but I just think it's too risky. Right there, it's kind of in no man's land. We're kind of hovering back and forth over the EMA. We just came off the highs, and we haven't got back here, and we're below the EMA, so it could turn up here and hit the EMA and turn right back down. So I just think it's a little risky. There's another second entry long right here with a bullish bar. Again, it's just kind of in no man's land, and we just came off the highs again, and we're not back to the EMA. This thing's looking pretty, relatively strong, but I just think, you might argue for that one to be green. But I'm going to tell you, I wouldn't take it. I think it's too risky. It worked this time, but the next time you try to take it, guess what will happen to you? It's not a very high probability trade. I'll just leave it at that. And we just kind of start working sideways and finally come back, and rather than bouncing at the trend line, we get a break. Make that little low. This is kind of a repeat pattern, but it's congestive. Wait on the high or low, and really you need to wait on the failure, because by the time this one comes around, it's a little engulfing bar, and then it closes and it's starting to look congestive. So, but when you get that reversal pattern, it actually breaks lower and turns and goes up. You could just wait for it to close, but when it breaks higher there, you could go ahead and go long if you wanted. Until this bar closes, I'd leave my stop below this point right here, and then once this closes, I'd move it up to here. Because while this bar is forming, you don't know how big it could be. So it's a little risky to put your buy stop under this before it closes. So just keep that in mind on those engulfing bars you use the previous swing. And I wouldn't use that one because this one's lower than that one. So that's a little failed second entry short. Turns out to be a good trade. And then we're just kind of working sideways again. And I don't see anything there I like. It's tempting to go short right here, but it's just too congestive and too much sideways. We're still above the EMA. It's a shame because it's a really nice move. There's a high or low here that you could look at as a failed second entry long, but it's just where it's not even back to this trend line, much less the EMA. It's just not a good spot. And it's right at those lows, so you just can't really take it. You just have to watch that move go without you, and that's frustrating because, but you can't let that bother you, because if you do, next thing you know, you're entering one of these other trades and it's going against you. So if you followed the rules and didn't take a trade and there was a good move, the worst thing you can do is beat yourself up over it. Once the trade's gone on, forget it and move on. Look for the next trade. And then you get a little first entry short, second entry short, but again, that reversal's too far up. And you actually try to go lower again. It breaks lower and turns up, but that's just congestion. And it is off that key entry point, but I would wait. And you don't get a chance to move. So there's 2 great moves that happen over about 12 o'clock to 1 o'clock. And that's what separates really good traders from average traders or even bad traders, is being able to sit and watch those nice moves and knowing that you didn't get an entry and not bothering you one bit. That's what you have to do to be a good trader. So we rock it down here, then we try to come back. And there's actually, notice the high, first entry and then second entry. So there's 2 legs down there and a failure. So I like going short there. At this point, I really thought we were going lower, but we end up bouncing, and this ends up turning into a range. So on this high or low with a double bottom, and that far away from the EMA, I like to take it to the long side. And then it's even more tempting to come back, but you don't have much room there. It would have worked, but then you're bouncing. And then finally it bounces again. So now you've bounced across here multiple times. And this actually breaks lower and turns up. I marked it just because I know somebody will ask about it. But, I mean, that bar is $412.50 worth of risk. Of course, if you went long right above, one tick above this, that probably cuts 50 or 100 bucks off of it. But that's still a lot of risk, and I just think it's too risky. I marked it, though. And you see what happens. It comes rocketing back down for this is the first leg, and then this is the second leg of that move. And it's a little harder to see, but that's what you got there. Well, it's not what I wanted. You got leg 1 and leg 2 right there. It's pretty close to a measured move. And then it rockets back up again. And then finally it comes back and you get a higher low that's right across those lows right there and a nice signal bar. So I like going long there. And we run up and you actually get a failed second entry short here, but it's not a good reversal type pattern. You want those to happen at the EMA. And it even tries to go lower again, so you got a little bit of a trap, but look how congestive that is. And we've been turning down. There's resistance right across there. We've turned down a few times, so I don't like that entering right there. However, once you get that measured leg, there's your first leg, and then you end up getting that measured leg up. And it looks like 2 legs up, and that's a nice signal bar way away from the EMA. Again, you're better off to wait on the lower high, which you don't get. So, but you may take that trade because of the 2 measured legs up and the nice signal bar. And it just runs back down to the middle, and then it just kind of chops on into 2 o'clock. I don't see anything else in there that interests me. I think once you start going sideways into that 2 o'clock, there's nothing there, and there's really nothing here either. You could look at this as a first entry, second entry that fails, but it's below the EMA, so there's a good chance it tries to go higher and turns back down, so it's just not a good reversal or trap or whatever. It works, but it's not one I'd want to take. So that's what I saw today. Again, it's just a big range day. And the only way to play this is to narrow down into these smaller patterns and stuff. There's no other way around it. And just remember, the further you get away from the EMA, don't enter in that direction anymore because it's going to snap back pretty quick. And so that's another way we want to use the EMA to tell us never enter when prices are far away from the EMA, because there's that 21 bar EMA is your moving average, and prices are going to stay around that moving average, and the further they get away for the longer, the more the stronger the likelihood is it's going to snap back. Just like right here is a good example. Look how far prices are getting away and how long it's lasting, and then suddenly boom, it snaps back. Then we break below, and so don't take trades in the direction of the trend when it's far away from the EMA. Wait for the corrections that come back to the EMA. That's the way you want to enter. So anyway, we're almost 25 minutes here. I'm going to wrap this one up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.